GBP dollar is trading pretty much flat on the day right now. Obviously, markets digesting all the over the weekend escalations. Ninth straight night of strikes between US and Iran. Trump planning for a wider war. Iran vowing not a single drop of oil and gas will pass through the Strait of Hormuz. Markets are still completely delusional, underpricing the idea of a hike in July when Kevin Walsh said that the FOMC are going to be vowing to bring down inflation. And the only way to do that right now, because oil prices are rising, is to be higher for longer and look at rate rises, which I think there'll be a rude awakening for the market. Not this week, next week when we have the FOMC decision. So it could be a bit of choppy consolidation price action right up to that. GU is obviously in this channel to the upside at the moment, high highs, high lows, but runs the risk of breaking out of that structure to the downside. But one of the key reasons why GP is generally holding some ground across the board is the optimism of this new prime minister that's starting today, Andy Burnham, taking over previous prime minister Keir Starmer, the current prime minister Keir Starmer. But it's all going to fade. The UK political mess is forever been a thing. Well, definitely for the last, I'd say, maybe decade or so. There's just a lack of, it's just a mess anyway, basically. So expecting eventually for this to break out to the downside. It's a matter of timing, if not when. When, not if. That way around. So still expecting that downside pressure to come into play for GBP. When we look, obviously, the weekly, we've had obviously this pullback and being drawn back into this range. And GBP, in comparison to EU, has obviously held some ground because of this delusional optimism around this political situation, the political change up. And look at the range. Look at this awful range that we've been in for quite some time. But I still firmly believe will be a rude awakening for the pound, versus the dollar. But it may just be a case of going through the motions this week, leading into next week. I would lean towards, as I say, further downside for EU. I'd pick EU over GU at the moment. Anyway, but you can trade as per you wish, just giving you those key ideas. In terms of near-term areas of liquidity, we're at sort of 34, sort of 50, 60 region. We've got a bit of potential bearish, near-term bearish flag here, which could break out to the downside. Similar to Euro, where we've had a sweep of the Asian range high right now. I'm going to be drawn to this lower part of this channel and obviously this area of liquidity here. It will take something to break out to the downside. I'm not sure we're going to get that breakout to the downside today in terms of breaking that channel, because markets, as I said, just going to be a lot of consolidation. And bear in mind, we're in the summer months now. This summer months of volumes are largely reduced. So it will really take a catalyst to break out and get that next big committed move, which likely could be the FOMC. Anyway, guys, for all links stay to be able to actually trade macro with technicals, regardless of how you approach the market technically, there's various links that you can check out below. Other than that, I'll catch you in the next update.